Welcome to this Thursday edition of FreightWaves Now. I'm Emily Zink. Of course, the oil markets changed yet again overnight. John Kingston is in with an update for us. But first, let's get started with our weather with meteorologist Nick Austin.
Welcome to FreightWaves Weather Thursday edition. I'm FreightWaves meteorologist Nick Austin. I'm sure you've already heard about all the flooding out in parts of Texas. That is the big weather story and the focus for today, although we're going to talk about a couple of other topics as well. But we're going to start in Texas, in southeastern Texas. Houston has gotten lucky from this particular storm, which is still a tropical depression. It's named Imelda. And Houston has really been spared from any major flooding, even though they've had some daily record rainfalls the last couple of days. But the storm, which is centered just north of Houston, the rainfall and all the flooding is actually to the east of the center. So places like Beaumont, Galveston. Today, the threat shifting over into spreading into parts of southwestern Louisiana near Lake Charles and up towards Shreveport and even in Tyler, Texas. That's where we're going to see a lot of more flooding happening today, as well as down in some of the coastal areas. So Texas Department of Transportation has already been reporting since yesterday that there are some roads, some parts rather, of Interstate 10 closed around the Beaumont area, not the entire interstate going through there, but at least sections of it. And there's definitely strong potential for more road closures along I-10 and especially a lot of secondary routes today, right in this area from around Beaumont and Galveston over into southwestern Louisiana. The heavy rain is going to spread northward, so Shreveport, as I mentioned, Tyler, Lufkin, Texas, you could see a lot of rain today too and flooding. The storm is probably not going to start fading away and dissipating really until maybe later this evening after dark, maybe not even until close to midnight local time. So it's going to be spinning just right over this area all day long. Flash flood watches, flash flood warnings are going to continue today. So just not a great area for any truckers. You don't want to even head towards this area or try and go through there with all the areas of high water. There have already been evacuations, water rescues over the past couple of days, and storm totals since Imelda moved inland and started spreading all this heavy rain on Tuesday. Some parts of southeastern Texas has seen 20 plus inches of total rainfall, and there's going to be 5 to 10 inches more possible in some areas today. So a big problem. Truckers definitely want to stay away. The one good news as far as transportation is that BNSF and Union Pacific railroads have both been reporting so far just normal operations, no rails that have been washed out or closed, so that's good. So that's rainfall. We're going to move now up to the northern Rockies where there's the potential for some snowfall late tonight and through the day tomorrow. So just for overnight drivers, want to be prepared for that. This will probably not affect much interstate travel, but high elevations of southwestern Montana through the Beartooth Mountains and some of the other high elevations as well could see several inches of snow starting to pile up. It'll start late tonight and then through the day tomorrow could add up to several inches. So this could affect maybe local deliveries in some of those high elevation routes and some of the high elevation mountain passes. Lastly, we're going to talk about Jerry, Tropical Storm Jerry, which is still out in the Atlantic, well south of where Humberto was, and Humberto is luckily not a threat to Bermuda anymore, really. But this is Tropical Storm Jerry, winds at 70 miles an hour. Once they get to 74 miles an hour, which will probably happen today, it'll become a Category 1 hurricane. It's not likely going to make a direct hit on any of the Caribbean islands, but it could brush by the northern Leeward Islands, maybe Puerto Rico. Most likely it's going to stay north of those islands and then kind of curve and stay well off the eastern coast of the U.S. There may be a little bit of high surf across the Bahamas and maybe some parts of the southeastern U.S. coast, and maybe minor disruptions as far as ocean freighters. They're just going to have to steer around the storm, but no major impacts. So that's the good news about Jerry, at least for now. But you know, just a slight shift, a slight change in the track, which does happen sometimes, could change everything. So we'll just keep tabs on this and keep watching Jerry over the next several days. That's what you need to know about your weather for today. Have a great Tuesday and be careful out there. Thursday and be careful out there.
Welcome to your Thursday edition, your carrier update sponsored by AT&T Business. My name is Kyle Cunningham. There has been some crazy stuff happening. It's only Thursday. We still got one more day to go this week. But we've been talking about Detroit, Michigan and the surrounding markets around it. Let's go ahead, jump into these charts and see what's going on. Detroit, outbound tender rejects 47.99%. That's almost 1 out of every 2 tenders being rejected in that market. So if you can brave the storm, if you can brave the picket lines, you might find yourself with some advantages getting into that market. Same story right up the road in Saginaw as well. About a 30% outbound rejection. Your lead time in Saginaw, 2.5 days. Detroit, 2.4 days as well. Wait time for the 7-day average in Detroit, around 157 minutes. So once you get in there, you're going to be waiting for a little bit. Let's go ahead and move to the next one. We're going to be talking about how this is spilling over. Toledo, Ohio, right south of Michigan there, is experiencing the same capacity crunch as well. Lead time in Toledo, 2.2 days, 138 minutes on the average wait time. Your outbound rejections in Toledo at 17%, so not as high as where they were in Michigan, but still elevated, possibly going to be able to get yourself some advantage in Toledo without having to get in the mess that is up there in that peninsula in Michigan. You can see your white line here, your outbound volume, high elevation, trending a little bit down as the rejections trend up, so take advantage while you can. Let's go ahead and take a look at what's happening down in Tennessee. No place I'd rather be. Tender lead time in Memphis, 2.5 days, trending up a little bit. Your average wait time over the last 7 days, just a little bit over 2 hours. Let's look at the refrigerated outbound rejects in Memphis at 41.46%, extremely advantageous. Taking a look at the chart here in these channels, you can see from May until where we're at mid-September right now, it's very volatile. It tops out around 50% in terms of rejections. In August, jump down, jump up again. Where we're at right now, possibly going to see that continue up. Look for a return at around 50%. Once again, 1 out of every 2 tenders. So very advantageous if you're frozen in Memphis. Now to close it out, talking about what's happening down in El Paso, Texas. Wait time in El Paso trending down, which is great. El Paso, strategically, statistically, usually one of the highest wait times in our sonar platform. So seeing those come down mean that it's going to be advantageous to you. A little bit more to talk about in regards to the outbound rejections. Low at 6.6 outbound El Paso, actually down about 20%, but something I wanted to touch on and show you guys here is the tender lead time here, your orange line against your blue mountain, the outbound rejections. You can see that the lead time and the outbound rejections tend to stay together and stay close. You can see the bottom of the outbound rejections around 5%. So look for this trending down to 5%, possibly a bounce up above 12.5. El Paso one to watch. As always, make sure you watch FreightWaves Now every single day for your carrier update.
Hi, I'm John Kingston. I was on FreightWaves Now yesterday and I started out by saying, boy, what a difference a day makes. You know what? I can say the same thing again today because let's review it. It's Thursday now. On Tuesday, the Saudis said we're going to make all of our contractual agreements. We're going to fulfill all of them. Our production is half back from the bombings over the weekend. The market took that and sold off. Yesterday, it continued to sell off. Today, overnight, it's almost like the market looked at everything and said, you know what, maybe we don't want to take all this at face value, and prices have risen, anywhere about 2%, 1.5% to 2% overnight and into Thursday. I think what people are starting to think is, okay, maybe they can meet all their contractual requirements, but how much of that is going to come out of inventory? They have storage all over the world, the Saudis do. There were reports that have been denied, but I'm going to give them a lot of credence that the Saudis were turning to Iraq to buy some of Iraqi oil so they could meet the Saudi contractual commitments. Of course, that's not new oil, that's just transferring barrels around. So the reports continue to be that some of the facilities at the processing center on the Saudi coast are going to need like 2 months to really come back full. And so the big question out there is, even if the Saudis bring their half of their lost production back, remember they lost about 5.7 million barrels a day, so even if they come back about half of that, that still leaves the market short about 2.5 million barrels a day from what they were producing before that. That's a pretty big number. You start to draw down inventories as a result of that, and maybe you get by the time it's November or December, and inventories around the world have really tightened. Now, let's remember that looking at the supply-demand forecast going to next year, the world was looking at a significant glut of crude. So in some ways, tightening up the inventories might not be bad for the producers like Saudi Arabia, not necessarily good for the consumers. Let's talk about the consumers. The price of diesel at the pump and at the wholesale level did shoot up on Monday. Tuesday kind of came down a little bit. It continued to come down. Atlanta is a very good market to look at. It's a real regional hub for the whole Southeast. You can see that the wholesale price on average went up to well over 210 and dropped down to 202 yesterday. This is data in Sonar. The wholesale price is a leading indicator. The retail price will usually eventually key off of that. So I think that, you know, this thing could go up again, but that big kind of sell-off that after we saw Tuesday, we thought, well, maybe we'll keep going down. Right now, that's taking a breather. The reality is that the commodity diesel price is about 10 cents above where it was last Friday, which was the last day before the attacks. The price of crude is now, I'd say, maybe $4.50 to $5 above where it was before the attack. So we're still significantly above that. It's going to be interesting to see what the DOE EIA retail diesel price is going to be. You know, the survey is going to be of all these stations that were raising their prices, cutting their prices, just a wild, wild market. I don't even know where to predict that thing's going to be next Monday, but it's obviously a very important number because it's the basis for fuel surcharges. So keep watching FreightWaves Now, keep reading FreightWaves, and we'll cover all of this. Thank you.
It's time for our broker update, and Donny Gilbert joins me now. And what markets are looking hot right now, Donny?
So I brought you our reefer outbound tender rejection map. And of course, this is kind of a high elevation look at what's going on in the reefer market. Our tender rejection rates, correlate very closely with the spot market rates. So I want to kind of start out on the West Coast. Out here in Washington, Idaho, and the Salt Lake City area, we've got a lot of apples that are being harvested. We've got hops for beer. This is the one time of year that the hops are harvested. So get them now because they're not going to be available the rest of the year. And we've got potatoes through the Idaho markets. So all through here, through Washington, Idaho, and Salt Lake City, all these have picked up a lot on reefer tender rejection rates.
How long does that usually last? Because I feel like this whole week we've been talking about apples, hops, potatoes, all of that stuff. So how long do we get to take advantage of this?
The apples start, and then we get into the September. We get the potatoes and the hops, and so we'll go another few more weeks, at least far through the end of September, with elevated tender rejection rates. And then of course it'll come in, it'll peak, and then it'll slowly start dying down. So strong markets for once up in the Pacific Northwest. This is a hard area to work with sometimes, and a lot of people avoid that area, and that's one reason that reefers are, right now in high demand, because a lot of people stay away from that area.
But you have another hot market you're going to show us
through the
too.
center of the country, the poultry area, this has been hot really all year long right now. And of course, right now it's getting near the end of September, and coming up in obviously November is Thanksgiving, which people are going to be needing a lot of turkey and also chicken as well. And so this area is really going to be an area to watch, because you got from kind of northern Arkansas all the way up through Iowa. That's where a lot of the poultry is produced. So these areas will start, right now they're elevated now. They're even going to get probably a little bit more elevated as we get in closer to the Thanksgiving holidays. Throughout, we got a few spots in the Midwest that have picked up over here around North Carolina, Virginia. But that's, the strongest markets right now. So I want to dive into another market, the Joplin, Missouri market. So here I brought up a chart showing both our outbound tender volumes and our reefer tender rejection rates. Here in the blue is our outbound tender volumes. You see them pick up after the Labor Day holiday, and they've dropped down around 51.51 index points. So even though they dropped down, our reefer tender rejection rates, which is here in the green line, they have picked back up over the last few days. And this is a pretty good increase, up to now 32.76%. That's a very, very strong tender rejection rate. So our spot market is well above contract rates in the Joplin, Missouri area. So one area to send your reefer carriers towards is this area. And even the markets, even north and south, are also strong as well, but this one specifically. And another market that I want to look at today is the Milwaukee market, Emily. I brought again the same type of chart, and it's with our outbound tender volumes, which you see dropping down here for the Labor Day holiday, and then picking back up to a little bit below what we had kind of before the holidays. But what we saw is this line here in yellow is our reefer tender rejection rates. And they really picked up in the Milwaukee market. So here, this market's located just north of Chicago, and it's been fairly weak for quite a while. So this is another good market for carriers to run their reefer equipment into. And as for a broker, this gives them the ability to raise their rates. So if you're going to be bidding a load out of the Milwaukee market that's a reefer, you need to increase your rates kind of well above spot market rates or the market rates right now, because your carrier costs are going to be a lot more. So here, when they give the ability to run their rates up, it kind of helps them out with the margins, kind of give them a bit bigger margins. So this is a market definitely to look into while these tender rejection rates are elevated.
So if you're a broker right now, you would probably keep your trucks in the Midwest. Is that what you're saying?
Yeah, right now, throughout the Midwest, there's been a lot of markets that are a lot stronger. The Southeast is kind of an area right now that a lot of carriers are trying, the smaller carriers are trying to stay out of, a lot weaker markets. So if you're going to run down to the Atlanta, let's say Atlanta, they're going to raise their rates on you. So that makes it very tough for you to increase those margins. So right now, the Midwest has been fairly strong. So if you're a broker, yeah, get those loads that keep the carrier in the Midwest, and they're more willing to work with you on their carrier rates. Or run the long haul out to California.
Yeah, the Pacific.
California is, right now, they got a lot of produce still. They move all year long out of Southern California, or even to the Pacific Northwest, where you got that reefer markets booming. And drivers love those long hauls.
Yes. You got the apples, you got the hops, you got the potatoes, you got it all, making me hungry.
Yes.
Yeah, great advice there, as always, with our broker update. And you're watching on YouTube, so make sure you hit subscribe if you haven't already. Also, follow us on LinkedIn, Instagram, and Twitter. We hope everyone has a great Thursday.